Welcome to Alpha Recap, your post-market wrap from stockalpha.ai. We're unpacking Friday's tape, and as always, if you have questions, you can reach us at stockalpha.ai. Ready to dive?
Absolutely. Markets closed mixed on Friday, and there were two very different narratives pushing prices around. A hardware and photonics surge on one side, and geopolitics plus guidance risk on the other.
So, what really stands out here is the sheer strength in optics and AI infrastructure names. Marvell Technology ran to all-time highs, and a bunch of photonic suppliers went parabolic.
Right, and some of those moves were dramatic. One optics name was called out as up, get this, about 1,100% year over year. That's not a blip.
Yeah, that tracks. Honestly, I was a bit surprised by this one.
The market signals are pretty clear. As generative models scale, electrical interconnects are bumping up against power and latency limits. Photonics, optical transceivers, silicon photonics, pluggable modules, scale bandwidth with much lower energy per bit.
Put simply, the plumbing matters. If data centers need more internal bandwidth to run big models, photonics firms become frontline beneficiaries. And that shows up in margin-rich order books, and right now, multiple expansion.
Right. And the other thing is supply chain nuance. When demand ramps, lead times, component bottlenecks, and CapEx cycles can create big volatility for suppliers.
Which brings us to the rotation chatter we heard on Friday. Jim Cramer essentially amplified a buy hardware, sell software theme. That narrative fed momentum into the optics rally.
Momentum traders picked up on that, and that kind of thematic shift can be self-reinforcing. But it's also tactical. If yields or CapEx commentary changes, the leadership can flip back.
Now, flip the tape, and you get the defensive story. Geopolitical risk around the Middle East kept energy and defense on investors' radar, and guidance cuts hit travel and consumer discretionary names.
Norwegian Cruise Line slid after weaker guidance, and that's the classic discretionary reaction to uncertainty. Meanwhile, Lockheed Martin got headlines for a programmatic win tied to NASA's Artemis work. That's a different kind of revenue stream.
Small reactions. Lockheed win, defense steady. Cruise guidance, travel down.
Short and to the point.
Another major flashpoint Friday was OpenAI's internal memo on April 13th, signaling a push to diversify away from one big cloud partner and toward Amazon.
That's a systemic signal. If a major AI provider reduces dependence on one cloud provider, it changes channel dynamics. It's about revenue share, vendor lock-in, and who captures the incremental economics of offering large models.
So, in plain English, OpenAI trying to work more with Amazon and less with Microsoft could reshuffle who gets paid for AI compute and services. That's not just an Amazon versus Microsoft story. It ripples through enterprise procurement and product bundling.
Exactly. For clouds, the risk is twofold: potential revenue dilution and competitive bundling, where one provider might offer optimized hardware stacks or preferential model access. For customers, more choice can be good, but it complicates procurement and integration.
And the market reacted to that uncertainty. We saw trading flow in names connected to cloud ecosystems, and desks were debating how fast any commercial deals will show up in public filings or revenue lines.
Speaking of market debates, there was a loud disagreement around energy. Mike Wilson at Morgan Stanley argued energy prices have probably peaked, pointing to a narrowing Brent to U.S. crude spread as evidence the Iran risk premium was cooling.
Conversely, other analysts said energy and defense stocks are pricing a much harsher scenario than the broad market multiples would suggest. So you've got two competing readings of the same tape.
That's the core tension. Is the geopolitical premium transitory, or does it underpin a longer period of commodity and defense strength? The Brent U.S. crude differential is one useful data point, but it's not definitive on its own.
Quick reaction. Data suggests caution, but interpretations differ.
On guidance and sentiment, the day reinforced that company-specific outlooks remain powerful catalysts. When Norwegian cut guidance, the whole travel sector felt it. Chime Financial and other retail fintech names also saw sharp moves on changing investor sentiment.
JP Morgan's strategists pushed a buy-the-dip kind of message for investors with at least a 3-month horizon. That's a strategic, longer-view stance versus the tactical caution traders showed on Friday.
Right. Different time frames, different playbooks. Tactical traders were nervous. Strategic allocators might see a temporary repricing as an opportunity. We need to be careful with language, though. This is analysis, not personalized investment advice.
Absolutely. Analysts note and data suggest we aren't telling anyone to buy or sell. This is informational only.
On the corporate micro front, routine SEC filings and small M&A cropped up in the tape. An infrastructure firm acquisition and a couple of 8Ks landed in headlines and can be short-term catalysts.
Those items often fly under the radar, but can mean a lot for holders who are watching for governance or contractual changes. Event-driven traders were likely active here.
Let's talk implications by investor type for a minute. Short-term momentum players. Optics and hardware were fertile ground, but that comes with sharp reversals if inventory or CapEx signals shift.
Long-term thematic allocators should be watching hyperscaler CapEx commentary and any durable supplier contracts. A one-off order spike is not the same as multi-year structural demand.
Income and defensive investors. Geopolitical uncertainty argues for balance sheet scrutiny and cash flow stability. Defense contractors with program continuity look different from cyclic leisure names that react to near-term demand shocks.
Growth holders, take note. Goldman's Rule of 10 framing says long-duration growth names could rebound if yields ease. So watch fixed income moves. They're central to this rotation story.
Exactly. If yields stabilize or fall, momentum could flow back to large-cap secular growth. If yields rise, CapEx and hardware cyclical names may keep the edge.
Short reaction, watch yields closely.
Short reaction, watch hyperscaler guidance.
Now, some quick clarity on mechanics. Why do optics matter now? Large generative models require huge intra-data center bandwidth. Optical interconnects move lots of data with lower power per bit, which helps scale performance without blowing out energy costs.
That structural demand could justify extended valuations for suppliers, but it sets up a supply chain watch list. Lead times, component shortages, and CapEx cycles can create lumpy revenue read-throughs.
So, where do we go from here? Monitor hyperscaler CapEx commentary. Watch the Brent US crude spread for geopolitical premium signals, and keep an eye on OpenAI's partner announcements and commercial rollout timelines.
Also, read guidance carefully. Sector-level guidance has been driving re-rates, and you need to put those comments into the macro context we talked about. Discretionary names will be more sensitive than program-driven defense or aerospace names.
Top takeaways. 1. A durable hardware and photonics wave is forming around AI infrastructure. 2. Geopolitical uncertainty and guidance risk created a protective bid for energy and defense that may or may not persist. 3. Platform diversification by big AI players can reshape cloud economics in unpredictable ways.
And to reiterate our disclosure here, this is market analysis for informational purposes only. We are not providing individualized investment advice or telling anyone to buy, sell, or hold any particular security.
Final short reactions. Big themes, nuanced risks.
Yep, and the next catalysts will be hyperscaler earnings commentary, the Brent differential readings, and any public partner deals from major AI companies.
That's our recap. If you want a quick reread of the key points, here are the essentials. Optics and hardware led. OpenAI's platform move mattered. Geopolitics kept energy and defense in focus. Guidance drove sector rotation.
Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.